So welcome and thank you everybody for attending GreenPath Financial Wellness webinar today about strategies for successful saving. GreenPath is a trusted national nonprofit housing and financial credit counseling agency with the mission of empowering people to lead financially healthy lives. We started as the budgeting service of the Michigan Credit Union League back in 1961 and grew into a nationwide financial wellness organization. We counsel in all 50 states and Puerto Rico, and we believe that financial education is something that we should all continue to engage with, regardless of how much we already know. There's always something we can learn to help maintain or improve our financial wellness. And today we want to talk about the topic, strategies for successful saving. This is us. I'm going to introduce myself really quickly. I'm Stephanie McNeil. I've worked at GreenPath officially since September of 2019. My mother, actually, Donna McNeil, just retired as our Chief Operating Officer. We worked here for 35 years, so I pretty much grew up knowing who GreenPath is and what we do, passing on the legacy, I suppose. I've worked in all of our client services departments, and now I work as a partner experience manager. So I work directly with our credit union partners that decide to have us as an extension of their credit union services as a financial wellness partner organization. And then I have Chris with me here today.
Yes, thanks, Stephanie. Crystal Lugazima here. I've been with GreenPath since 2001, so I must have started when I was 5, I'm gonna guess. So I was a financial counselor there for many years, talking to individuals and couples that were trying to reach their financial goals. And I've been on our education team since 2010. So for many years, I've been out in the community giving workshops on a variety of financial topics. And more recently, as our education team has focused on some of our digital strategy, we've worked on a lot of things such as our Learning Lab and Learning Lab Plus platforms. And I'm also the host and producer of our Real Stories podcast, where we talk about individuals' money journeys.
Thank you for introducing yourself, Chris. Yes, so today, our agenda, we will be talking about different types of savings accounts and how they're used, specific purposes that you may want to save for, and also give you some steps to create and be successful with your savings plan. So Chris is going to kick us off with talking about different types of savings accounts.
Yeah, and before I do that, we're going to talk about a variety of different savings accounts today. We actually have 8 of them that we're going to be covering, and I'll be going over them in detail. But before we do that, we actually have a little poll because we're curious for the 147 of you so far out there, what types of accounts do you have? And it's okay if you haven't heard of all these just yet. So I'm going to get a poll going. Give me one
Some very niche accounts listed. So
yes.
We want to know how many of these you are already familiar with.
Yeah, or how many of them have you actually opened? So you can check as many of them. So if you've opened all 8, you can check all of them.
Perfect. And while you guys do that,
jumping up. So right off the bat, we could see the one that a lot of people have is the traditional savings account by landslide. Just no surprise.
Yeah, that's fair.
Thank you for I appreciate it. Most of you, 3/4 of you have submitted your answers here. That's great. So other popular answers, CDs or certificates of deposit. Retirement savings is a big one as well. So again, we're going to be going over all of these momentarily here, but just want to get a kind of a sampling of what everyone is familiar with. And what we're basically seeing is that all of them actually have at least some participation and some familiarity with each of you. So we're going to go ahead and end that poll. There'll be some other polls as we move along here, though. And I will share the results for all of you to see that.
I love it.
And yeah, thank you. Some of you I see are chatting in some questions, and then we'll definitely set aside some time to make sure we have all those questions answered as we go through the next few sections here. All right, so traditional savings. This is, your basic savings account. What is the point of it? You earn interest on here, right? As opposed to a regular checking account, which, although some checking accounts nowadays do have interest, a savings account, that's a benefit of it. In most cases, you're going to be limited to how many withdrawals you could make per month. This is always going to be on a case-by-case basis. There's different rules that govern these, and each financial institution might have their own rules related to these as well. And one other thing that keep this important to keep in mind is there might be a minimum balance requirement for some of these. That is going to, again, vary by institution, by account, but minimum balance requirements very well could apply to just about every account that we are going to list here today. Now, a high yield savings account, just a sort of a different take on the traditional savings account. It's usually just sort of an enhanced product that many financial institutions offer. If they do, you'll notice that they usually offer a slightly higher interest rate. So whenever you are searching for different accounts, just look at all the different accounts that they have, and they usually will have a nice breakdown of some of the pros and cons and any fees or minimum balances associated with them. So it might be that the high yield account has a higher interest rate, but maybe has a higher minimum balance requirement to be able to access that, for example. Then we have club savings. So club savings account, this is things that are for a specific purpose, such as the holidays, Christmas, summer vacation, things like that. And these typically have a set amount of time that you could contribute to this account. And we'll just use the holiday savings as a good example of this. So in that case, it might be that from January to November, you're putting money into the account, and then automatically around Thanksgiving or so, there might be a transfer from this club savings account into your regular checking or general savings account, your traditional savings account, so that you then have access to the fund. So the whole idea is just to put a sort of a structure into your savings in there. And it's sort of like a nice way, sort of like a set it and forget it kind of idea. Then we have a certificate of deposit, commonly known as a CD, or in some cases, some financial institutions will call these share certificates. And so for these accounts, it's usually a set period of time. Typically, I've seen as little as 3 months, as long as about 5 years. The amount of the time frame is going to dictate what kind of interest rate you're able to tap into. And so sometimes if you have a longer time frame, it could end up being a higher or lower interest rate. It really depends on the economic environment as to what's happening there. Again, the benefit is if you don't necessarily need your money for that set period of time that you choose, it's a good way to take advantage of higher interest rates. Just keep in mind, though, that if you were to access your funds early, even though you could, there's typically going to be a penalty. So in some cases, it might be something like several months worth of interest might be penalized if you were to take the money out early. So you do want to be careful that it's not money that you're going to need in the short term if you do choose that option. One of the things I love about these is it's not sort of an all or nothing thing where you could actually get a variety of different certificates of deposit or share certificates and sort of ladder them. So I could get like a 3 month and a 6 month and 9 month, and you basically always have some amount of money that's cycling over every few months. And it's a good way to take advantage of the flexibility of having the money available when you can, but also at the same time being mindful of what the market is and whether or not there's better interest rates, or do you want to then use the money as life happens. We have a money market account. So money market, one thing we want to point out, this is not tied to the stock market, even though the name market is in there. Your money is not at risk. And this is just in general. When you are working with a bank, as long as it's insured by the FDIC, if you're working with a credit union, as long as it's insured by NCUA, the National Credit Union Administration, your money is protected up to certain limits, of course. But so the money in a money market account is safe. And this is basically sort of some of the features of both checking and savings in there. So you'll earn interest in a money market account. You may not have full check writing privileges, but you typically can use a debit card to make withdrawals from those accounts. Again, like everything else, there could be some limitations on there. Now we're going to turn to some other types of savings accounts. So health savings, commonly known as an HSA. These have eligibility rules. Now, a lot of times these are going to be tied to an employer-based insurance plan. So I'll just give an example at the one that GreenPath has. We have the ability to open up a health savings account, but for us to do so, it has to be in one of our high deductible insurance plans. But the benefit is if you do set up a health savings account, you actually have the money that you contribute is done on a pre-tax basis. It can grow tax-free, and you don't have to pay taxes when you withdraw the money. So it's sort of like this triple tax advantage, which is very rare in savings products if you could do it. You do have to use this on qualified medical expenses, but there are a lot of leeway that you have with these. So, for example, you can use it on there's a list that they'll give you the government maintains. So it's not just like going to the doctor or prescriptions. There's a lot of other medical types of considerations that you're able to use this for. And then we have the 529 accounts. These are your basically your college savings accounts. These are opened on behalf of someone else. You're going to name a beneficiary, either your kid or any relative. Each state has their own plan, and there are tax benefits to doing these. In many cases, you might get some pre-tax contribution types of benefits for these as well. So definitely something that is worth potentially looking into. You just want to understand the restrictions. So, for example, some college plans require you to go to school in that particular state. Others don't have that requirement. So each plan is different. So you really want to do your homework before you sign up for it, even though it could be a nice benefit to you. And then we have retirement savings. And this is a whole other topic. And occasionally we do give webinars on this topic as well. Many employers will offer these things like you'll hear like a 401k or a 403b plan, pension plan. You could also open up your own retirement account. So, for example, you have things like a traditional IRA or a Roth IRA are other examples of this. And depending on the type of account, you might have some pre-tax savings. Like in the case of a traditional IRA or 401k, you could contribute money on a pre-tax basis. Or on the case of something like a Roth IRA or even a Roth 401k, you could have money build up over time tax free. So different tax benefits of different accounts. But as you see here, one of the other benefits is that in many cases, your employer might do some matching. So it could be an opportunity to take advantage of some free money on there as well. So before we transition to the next topic, I saw we had a lot of questions coming, Stephanie. So maybe we'll start to take a look at some of those.
Yeah, that's fine with me.
All right. Let's see. All
I
right.
said, I see how come most credit unions do not have high yield accounts.
I mean, some of them just go by different names because, we're usually generic in how we explain this, saying financial institutions, but banks and credit unions will have the best example is like the CDs, right? So usually a credit union will call them share certificates, whereas a
Mhm.
bank will call them a certificate of deposit. So it's credit unions certainly have accounts that have higher interest. They just may not call it a high yield. They might call it something different.
Yeah, I know I recently opened a higher yield savings account, planning a wedding. Yay. But a savings account to put money into where it's earning higher interest than like my regular traditional savings. So the credit union does have it. Sometimes you have to reach out to them because they have different options available, but I would reach out to your financial institution just to see what options they have in terms of maybe some higher yield savings accounts.
Yeah.
Um,
And one of the things I saw a question about, like, where would you go for something like this? One of the things I like to do is if you go to sites, and there's many sites, but Bankrate is a good example of one where you can do a search for different savings products and see what is the market, showing in terms of money market accounts or savings accounts, or even when you're borrowing money and things like that. And it does change on a fairly regular basis. One of the things we'll see is there will be companies that will aggressively push a product and have basically higher interest for a period of time, and then gradually they kind of pull back and it's not the best. So if you're willing to move your money around on a regular basis, it could be an opportunity to take advantage of higher rates.
mhm.
If you prefer just the simplicity and the stability of it, and then having a long-standing relationship with, an institution that's loyal to you and meets your needs in a variety of ways, there's no right answer to that sort of thing.
So another good question that's what's the difference between a Roth and a traditional IRA for retirement?
Yeah. So Roth and traditional. So basically, we'll start with a traditional. So with a traditional IRA, if I put $100 in, I could then reduce my income by that amount. It comes time to like filing taxes in this case, right? So it reduces my tax base by $100. And so I may pay, even though I'm putting $100 in, I may pay, let's say my tax rate is 25%. I may only see a reduced income of like $75. So my money can kind of grow faster in that way. The thing with the traditional IRA is eventually in retirement, when I withdraw the money, I will have to pay taxes on that money at the time of withdrawal. For a Roth, you're putting money in that's already been taxed, so there's no pre-tax tax benefit initially, but then it grows tax-free, and then down the road, when you go to withdraw it, you don't have to pay taxes on the growth. So it's just a matter of the timing of when you want to realize those tax savings. And this it's not necessarily black and white where like one or the other is better. It's usually like having a combination of the two can be beneficial for most people.
Yeah, definitely. All right. Yeah. For the sake of time, I'm going to keep going. There's some more questions that might be answered as we're talking. We'll review those a little bit later on. But yes, thank you for going for those 8 different types of savings accounts. Every time I move, the lights turn on and off. So just bear with me for that. Now I'm going to talk specifically about different types of savings accounts, or now that we've done that, we're going to talk about different categories that you may want to save for. The first of which being an emergency savings, or money that you set aside to help you cover unexpected, unavoidable expenses. Again, note the emphasis on unexpected and unavoidable. Unexpected deal on flights to Europe. Is that an emergency? I wish. It's not, unfortunately, but a broken down car or a flat tire, that is an expense that we were not necessarily expecting that we are going to have to use or going to have to not avoid, especially if you need that vehicle to, say, get to work. The nature of an emergency is that it is unexpected, so it is important to keep the money in your emergency fund accessible so you can get to that money easily when it's needed. So this will require some strict accountability. However, you're going to determine for yourself, or maybe with your financial partner, your spouse, whomever, in advance what constitutes an emergency so that you are not tempted to maybe dip into those funds for that emergency deal on flights to Europe. The age-old question when it comes to saving for emergencies is, how much do I need to save? You may have heard advice like saving 3 to 6 months of expenses, which is a great goal to work towards. But for many of us, that could take a long time to achieve, several years in many cases. So start out by determining how much your household needs to feel secure right now. Is it a $500 cushion? Maybe it's your insurance deductible, your mortgage, or your rent payment, just 1 month of expenses. There's really no right or wrong answer here. Just find out a starting point that works for you and then work towards reaching that goal, and then continue to build your emergency fund from there. Speaking of, wouldn't it be great if we just had one unexpected expense for the rest of our lives? And once it was out of the way, we no longer had to worry about it. This car broke down once, check that off the docket. Don't have to worry about it anymore. Well, no, that's not how life works, unfortunately. So because of this, your emergency fund is typically something that is ongoing. You may reach into your emergency fund here and there. You may reach your savings goal and then need to reach back into that fund. Just know that this is something that you're going to have to rebuild again if you reach into it. And as you reach your smaller emergency fund goals, it's also helpful to remember that the more you have tucked away for those unavoidable expenses, the better. So I do encourage you to never consider your emergency fund as full. So switching gears just a little bit, saving for goals may be a little more fun than saving for emergencies. This is money that we're putting aside for future purchases that we'd like to be able to make. So this could be short-term, like short-term goals, long-term goals. Short-term, this could be something like savings for a vacation in 6 months, or long-term, like putting money away for maybe a down payment on a house or a vehicle in the next 2 to 3 years. Sometimes it's even longer down the road than that, like being able to retire early or at least comfortably. So if you're saving for a long-term goal and won't need that money for a while, consider putting these funds into an account that may offer you a higher interest rate and limits the access you have to those funds so that you are less likely to dip into them before reaching that goal. Of course, if something comes up and you really need to, you can, but the idea here is to try and earn more interest while you're reducing access to the funds that you're tucking away for those long-term savings goals. And many of us have more than one goal that we are working on saving towards at once. Maybe we're saving for that summer vacation in a couple months and also a down payment on a car or a home in a couple years. That's amazing. That's awesome. It's neither here nor there. So consider keeping those funds separate by using multiple accounts or maybe even sub accounts to split the funds up. This will help you ensure that you are on track for both goals and keep that money separated so you know how much you have available for each of the goals you are saving towards. The final savings purpose I will go over today is what is referred to as a sinking fund. Sinking funds are for putting away money to cover periodic expenses that you know are coming. So when I say periodic expenses, these are expenses you're paying for a few times a year, maybe once a year. They're not monthly expenses. So when these expenses come up, it can be challenging to account for them in your monthly budget, even though we always know that they're coming. Sinking funds are a way to set aside a little bit of money every month so that when these periodic expenses do arise, you're ready to cover them without derailing your entire budget for that month. Sinking funds are different from emergency funds in that sinking funds are for things that we know are coming. They are expected, unlike emergencies. So things like birthdays, anniversaries, other things that happen at the same time every year. The holidays roll around every November and December. Summer camp registration is due every May. Sinking funds can also be created for expenses that you may not know the exact date of, but you know you're going to have to cover at some point. So like maybe car maintenance, home maintenance, activity expenses for the kiddos. Emergency funds are for things that come out of the blue and cannot really be planned for in advance. No one expects to get in that car accident, maybe lose a job or get a medical diagnosis. Sinking funds are for expenses that, while less frequent, are still things that we know we will end up having to pay for. Similarly to goals, you are encouraged to have multiple sinking funds if you have multiple periodic expenses you want to be prepared for. All right, I hope y'all were listening because Chris is going to quiz you now.
Yeah, this is going to be the fun part. Here we go. Well, knowledge check here. And actually, I had a viewer trying to quiz us here, which we had a great question is, can you open up multiple buckets at a bank or credit union for that matter? Savings buckets are one of my favorite things. Not, you have to check with the individual institution. Not all of them offer that, but it's a great way to actually just have sort of like an envelope system, but in a virtual sense. So
Mhm.
yes, definitely encourage that if that institution does offer it, just ask them. And there's usually no penalties for opening and closing them. Sometimes it's just as a matter of one click to open and close them as needed. All right, so let's open up the polls here. Let me go back. And okay, so all these polls are going to appear at once, but we're going to go through one at a time here for you guys to fill out here. So we have different scenarios, and we're going to determine which of these funds that Stephanie just talked about would we use. So first would be back to school supplies. You guys think that would be emergency fund, goal savings, or sinking fund? And you can go
Back to
ahead if you
school.
wish, but going through these slide by slide here.
Ooh, I love the chat. We got goals, we got sinking in the chat.
Hmm.
I love this. Sinking in the chat. Ooh.
So it looks like the most popular answer for question one is sinking, and you guys are correct. Well done. Some of you mentioned goals, and there's some nuance in this, right? Because you might have a goal because you're saying, hey, well, school's in 6 months. I'm going to set aside for it. School, in this case, the reason we did sinking is because it is something that is annual because school comes around each year. Let's look at the next one. That's not so fun to think about. Tree falls
Ooh.
on your roof. And this one, overwhelmingly, the group said emergency fund. Let's see if we got this right. Look at that. Well done. This is the epitome of an emergency.
This really is. Unless you're expecting that tree to fall on your house and you're just waiting for that insurance.
Hmm. Let's look at the third one here. Holiday gifts and annual travel. This one was split between goal savings and sinking fund, with goal
Hmm.
savings doing a little bit better than sinking fund. Let's see. So this one we had sinking funds. And again, only because we had something that's going to happen on an annual basis. Nothing wrong. At the end of the day, right? It's just having intention behind it. If you happen to want to save it for goal savings, you're not really doing it wrong. It's definitely not an emergency though, right? Holidays, travel, that is all for you. Okay, a family vacation for next summer. And overwhelmingly, we had answers there. Looks like for goal savings.
Oh,
See, we got it. Yes, because this is something that is next year, so it's not necessarily just on an annual basis. Do an annual thing if, you know, same kind of idea. Okay, down payment on a new house. Again, overwhelmingly, we see the answers here are for goal savings,
you guys are doing so good.
making us look either good or bad, depending on how we look at it here. Let's see. Next one, we have new brakes on your car. It's a little bit tougher. And we actually do have a little bit of a split here. Pretty even between emergency fund and sinking fund, which I'm really excited to see. We forced you to pick one in the poll, but it
Ta-da.
could actually be both. Why? Because your brakes could, you may not realize, oh, I didn't realize my brakes were at the end of their life and need to be replaced. Or sometimes you could kind of anticipate the normal wear and tear of them. So both sinking and emergency fund could be appropriate for this. Now, an accident. This one, probably not anticipating that. And sure enough, most of you selected emergency fund for that. And then
You
last but
guys are
not
doing so
least,
good.
your annual insurance payment here. This one, we had a lot of people answer sinking fund. Let's see. Look at that. I think you guys were 8 for 8 for this. Well done. And I will
Yes.
share the results if you're all curious what you all put here.
Love it. Well, thank you all for participating, everybody that participated. We wanted some audience participation in this, not just Chris and I talking at you for 45 minutes. So we appreciate your participation and for listening to me talk about all the different types of goals we could save for. Now, I'm going to kind of wrap up by talking about how to build that savings plan. So we have 6 steps here. And step 1 is to create a monthly budget. Ooh, not everybody loves that word, but we want that monthly budget. You'll need to know how much money you have available to put towards your various savings account. And a budget is imperative to figuring this out. List all of your reliable income and review your statements to identify all of your expenses. Calculate how much money you have left to put towards savings after all of your priority expenses are covered. We will actually be providing everybody with a budget worksheet and an aligning priorities workbook to walk you through this process. So if you're registered, you will be getting these resources, and you will also be, I saw this question, getting a recording of this webinar as well sent to you. Next step, we're going to determine what all you would like to save for. What would you like to start with an emergency fund? What short and long-term financial goals do you have? What are the expenses that you're periodically paying throughout the year that sometimes surprise you? Or maybe you have experienced a little bit of stress when those expenses come around. I know I pay my insurance, car insurance twice a year, May and November. I know it's coming. Gotta start those sinking funds accounts. So when those days come up, I have that taken care of. Sinking funds that you might want to create, like I just kind of said, holidays, birthdays, anniversaries, car maintenance, home maintenance, insurance, taxes, medical, dental, vet bills. Vet bills are a lot. School expenses, activities for the kids. Again, great sinking funds examples, but splitting this up throughout the year makes it more manageable. So you're not having to pay it all at once when those expenses come up. Examples of goals, we kind of talked about these already, but shorter term goals, family vacation, new vehicle, down payment for a new house, moving expenses, longer term goals take a couple years. Shorter term goals are a couple months. So those are examples of those as well. So step 3, we know what we want to save for. We got a budget. We are going to go back to the amount of money in our budget that our budget can support going into savings each month. So how would you like to break that number down? Are there some goals or sinking funds that you have a specific deadline for? You want to make those a little bit of a higher priority, or do you want to get that emergency fund built up so when that tree falls on your house, we are ready for that as well?
Can we say if?
If I'll say if, that's fair. So an example of kind of breaking down what to do with those funds. This individual listed out all of the things that they would like to save for each year and how much they would like to save. They divided those annual amounts by 12 months in a year, to determine how much they need to save every month to reach these goals. If there's $400 available in their budget for all of this, that is amazing. If not, they'll have to go back to the drawing board and reprioritize or revisit their budget to determine if there's any room for flexibility with other expenses. Can we maybe not buy Starbucks twice a week? Can we delete a couple streaming services for a couple months? Let's try to make some more money available to get to that $400 so we can save for these different things. There's also the opportunity to bring in more income as well to make this work. You don't always have to cut in the budget. You can always look at opportunities for more income as well. Once you have determined all of your savings categories and how much you plan to save for each, it's time to get those accounts set up. Consider which of the different account types we talked about earlier would make most sense. So perhaps there's a club savings account that could align with one of your sinking funds. Definitely get in touch with your financial institution to figure out what might work best for you in those situations. They're here, they're the experts on those accounts. If you let them know what your kind of goal is or what you're saving for, they can look at those accounts and what might fit best for you in your situation. And determine how you might want to keep this money separate. Do you want to open entirely different accounts for each purpose? Or do you have the ability to break an account up into sub-accounts or buckets that allow you to keep the money in one account, but account for those funds separately? So definitely, like I said, explore your options here, but it is helpful to distinguish what money you are saving and for what purpose. Remember to look into options that may have a higher interest rate if you are not planning to touch the funds that you saved for a while. And the next step, your savings, you want to set up your savings automatically, those deposits. Determine whether you will make your deposits monthly, maybe each pay period, and then set up those transfers so that they happen as soon as you get paid. This is a great way to set yourself up for success by paying yourself first. And a lot of people, once those funds are just automatically transferred to those accounts, kind of don't miss it. You see it go there, it's there, but you are paying yourself or your future self first. And then finally, the funnest step, I think, is to sit back and watch your savings accounts grow. And then when a need arises, that emergency expense, if the tree falls on your house, a periodic expense, your car insurance, whatnot, something you've been saving for, maybe that goal, that summer vacation, don't be afraid to use those funds. That is what they are there for. Savings is an ongoing cycle. We save, we use the funds, and then we save again. Before I finish, just a couple of bonus steps to keep in mind as well. If you receive extra money that's out of the ordinary, tax refund, a bonus, maybe you picked up a little side hustle or got an inheritance, whatever it may be, consider putting this money to use in savings. Maybe you can fill up a couple of sinking funds for the year and then redirect those deposits to an emergency or goal savings, or something else like paying a debt down more aggressively. Maybe you want to put those funds straight towards a goal you're saving for or your emergency fund. Again, just be strategic here, make your money work for you. Extra money is a great tool to help you accomplish your savings goals. And finally, if you kind of all over the place. It's a lot of steps, it's a lot of information. You do not have to figure this out alone. If you're excited about the idea of saving, but you're kind of struggling figuring out how to make it work with your budget, just know that you are definitely not alone. That's why you have us, right, Chris?
Absolutely. Absolutely. So we definitely encourage everyone here to take advantage of some of our free services. We offer the ability to review your credit report with you free of charge. You can do a soft pull of that. We have rental counseling, whether you're about to rent an apartment or currently in a rental and trying to keep that on track. Mortgage and homebuyer counseling, which can be so important both on the homebuyer side to get you ready for that, or if you're in the middle of it and just how to maintain things as best as possible. We could offer student loan counseling. That's such a changing landscape. Just kind of understand all the nuances of how that works and keep that up to speed as best as you can. And then our debt management program, which is the ability to consolidate your payments into one manageable amount, and then often work with your creditors to lower your interest rates if you're behind, waive late fees, and things of that nature. Pay off your debt typically within a 3 to 5 year period. So all of this, all these options, you don't even have to know all this coming in. You just reach out, tell us what's going on and what your needs are, and then our capable people will kind of put you in touch with what the next steps are. Anything to add to that, Stephanie, before?
I will say yes, like you said, these services, they are free, they are confidential. If you're even just struggling getting your budget together, if you come and talk to one of our financial wellness experts, our coaches here, they will walk through your budget with you so you can kind of get more of an idea of what that looks like. I know this is awful to say on recording. Sorry, everybody. I don't keep a monthly budget. I work at Green Path and I don't. And a lot of people don't, and that's okay. But like, let us help you with that first step at least. That's the first step to trying to figure out this whole savings process is getting an idea of what your monthly budget is, what your monthly expenses are. This is the best way to do it. And we are able to help in that, if not with much, much, much more.
Yes, yes. And the question came in, how do we reach out to you? That'll be on our last slide in a second. We'll have all our
Yes.
contact information there. We do want to share some great resources that are out there. First, our budgeting worksheet, and each of these slides that are going to come up, if you have your phone out, take the QR code, it'll send you right to these resources. So this budgeting resource, it's sort of like two options. One is something that's available online where you can enter in your budget right there. If you have a desktop computer, you also have the ability to download an editable PDF that actually has formulas built in, or if you just want to print it out and do it by hand the old school way, it's sort of a nice way to organize it. So this can be, it's not just the budget itself, but also has sort of all the steps along the process. We have a variety of courses in our Learning Lab Plus platform, and we wanted to highlight a couple of them that were very tied into today's webinar topic. And the first one is making the most of your money. So making the most of your money is basically to say is if you get a lump sum of income, what do you do with it, right? Sometimes that decision can be overwhelming. And this one in particular we mentioned because it is tax season and many people are eligible for tax refunds. And if that is the case, or any sort of unexpected income comes in, this kind of walks you through, do you pay down debt? Do you build up savings? Do you save towards goals? Kind of walks you through your decision process with that. Then we have our online course, Aligning Priorities. This is another take on budgeting where it's different types of budgeting worksheets that we developed. But one of the things that this course is focused on is to make sure where you spend your money is aligned with your own values. So it actually starts with like helping you to self-define what those values are and how they do translate to your budget. So it's a beautiful step-by-step process to make sure that you are creating something that's important and meaningful to you. And then, of course, we want to excitedly announce our next webinar coming up in a month on April 8th, Magic of the Debt Management Program, one of the services we talked about earlier. So this will get into a lot greater detail about that. So my colleagues will be here presenting another webinar that'll be another great topic for us to cover. And you'll see in the notes, by the way, that thank you for doing that, Stephanie, to the different we've been talking about throughout.
Of course. All right, give us a couple minutes. I just put in the chat the questions about how to reach out to us that'll show up on, because we're going to go over thoughts, reactions, questions. If you have any more questions outside of what we're going to answer today, please, please, please reach out to one of our financial wellness experts using 844-218-6167. Can learn so much more about all of the different resources we have at greenpath.com as well. That QR code to get it. I see a couple other questions. The how we reach out to you, that answered that. Check. Where is your offices? So we have offices. We used to have offices all over the country. Lovely COVID happened. I have remote workers scattered all over the country now. We do primarily do all of our counseling over the phone now. We can counsel in all 50 states and Puerto Rico. Yes, we used to have in-person offices, but we are doing a majority of our counseling over the phone now.
Yes,
So
but when you do call in, you could always ask that we do have some counselors embedded at some of our partners. So
we
we
do.
do have some in-person counseling available in some locations. So never hurts to ask, but more often than not, it would be offered over the phone.
Looking through questions.
Let's see. Yes, and anyone asking about the recording, basically everyone who either joined or just signed up and didn't join, everyone, as long as there's the email address you provided when you registered, you'll be getting an email from us within a couple of days with both this recording and then those links to the resources that Stephanie just sent in the chat.
Yes. I want to make sure you guys are all set. I saw question somewhere. Can you explain how a health savings account would be advantageous for those on Medicare and what companies offer these?
Yeah, I mean, just the advantage of it is regardless of what type of medical plan that you're on, because anybody is able to use it now. There could be rules related to when you could contribute to them versus when you have to start to withdraw from them. So your age can play a factor in that. So you want to look at that further. But as far as like you could still use a health savings account at any age to use it there. As far as I'm not too familiar, honestly, with where one would open them. I know usually there are some rules again related to being in a certain type of insurance plan to be eligible for it. So
Another good question I saw was, is the 529 savings only for college?
no, great question. So it's basically for, and the rules vary, but they have different rules for different sorts of post-secondary education. So you might be able to use it for like a trade school or for different things like that. So you will want to read the specific rules, but it's not necessarily just for a four-year university.
Another question. What type of account would you recommend for your 3 to 6 month emergency savings?
I wish we could just create a poll for that one and see what you guys think. Because it's a 3 to 6 months worth say you want liquidity, you want the ability to get the money as needed with it. So a traditional savings could work, a high yield savings could work. The one I would not recommend for that would be a certificate of deposit, unless it's a 3 month certificate of deposit, right? But even then, your money would be locked up for the next 3 months, and you might need the emergency fund at a moment's notice. So you just want to be careful for it to not be tied up in something that if you need it immediately.
Adding things to the chat. Someone said that they're not able to see what I added, so I'm going through and adding all the links that I shared previously. So I apologize if anyone didn't see those. I'm going to add them to the chat really quickly for us. It's for the couple Learning Lab Plus courses that we talked about in the next month's webinar, along with if you have more questions outside of what we were able to answer today, please reach out to us here at GreenPath.
Yeah. It's our question, what should a person do if they're close to retirement age, like let's say in their 60s and have not saved a lot for retirement? In that case, it is never too late to save. The specific savings vehicle that someone uses, whether or not they should utilize retirement accounts or just regular savings accounts is going to depend on the different rules. But just as a general answer, it doesn't matter what your age is. If you're in a position to save money, it's just good to have a cushion. It's something that so many Americans struggle with is even like a small emergency, a small financial shock can throw them off. So we never want someone to kind of like put up their hands and say, oh, I'm past the age where it matters. Every little bit matters. Even if it's $100, it can make a significant difference.
Putting our hours in the chat. Are there any requirements to open any of the savings accounts?
Oh, basically, you just always just want to check with the institution. I've in my life opened up savings accounts within, even at new institutions, in under 15 minutes, sometimes when it's online, right? So most places try to make it as easy as possible. And if it's an account that I already have an existing or an institution I already have an existing relationship with, and I want to open up like an additional account, I've literally opened them up in like 20 seconds sometimes. So they try to make it easy for you.
Some of them have minimum deposits, just dependent. Yeah. Good questions. See new messages, just saying thank you. Yes, thank you guys for hanging out with us today. Like I said, if you have any other questions, feel free to reach out to us on that phone number. Check out that website. There are so many resources. Go ahead.
Yeah, no, there's a question about our hours. So I'll just paste that into the
Oh, I got the hours in there.
I got it. Look at you. Thank you.
What are your thoughts about online accounts for savings?
You could take, so the key thing with an online thing is one, you may be less likely to have heard of the institution if it's online, right? Because they're not local to you. So just first, just do your homework, look up their reputation online, double check that they are indeed insured by the Federal Deposit Insurance Corporation, FDIC, if they're a bank, or the NCUA if they're a credit union. But once you've sort of done your due diligence there, some of the online institutions can have higher interest rates
Mhm.
just because there's less overhead cost of having a brick and mortar location. And one of the things I've also noticed, particularly at some banks, is they'll have different savings products for their online division versus their brick and mortar division there. So you'd be
Yeah,
surprised. Sometimes there could be some good rates out there to be had. So,
that's what someone just said. Most high yield savings online.
you know,
When you call for help, are there connections, video and audio, or just audio? We just do by phone counseling or financial assessments as of right now. So yes, no video, just over the phone. It's the way we like to do things.
you know,
All right.
so
I
many
think
great
we'll call
questions
it.
coming in here. Yeah. Let's see if there's anything else. And yes, those links will be emailed. It takes us, it could take a few days. So it's today, Wednesday. So hopefully by the end of the week, we'll be able to get
Yes.
those out to you.
We'll get everything out to you guys. Regarding debt management, do you help for the whole 3 to 5 years? Yes. Our debt management programs, we are involved every single step of the way. We are helping you manage the repayment of those debts. We are fully involved the entire time during that debt management program. I'd say if you want to learn more about the debt management program, come to next month's webinar and they will uncap all of the information about the debt management program. Good question, though. All right. We'll say thank you again, guys, for tuning in, and we'll hopefully see you next month.
Absolutely. Thanks everyone for joining.
Thank
Bye,
you.
everyone.